Hi, everyone. Welcome to our Apartment Insurance Made Easy. This is Michelle Belden, your commercial underwriter here at CID. Today, Anae won't be joining us. She is in another meeting, so it will just be me presenting. And then in our marketing coordinator, Jacob Cole, is also on the line to facilitate things for us. So for some of you who probably attended our webinars before, you know this information. For our new attendees, just a few things. You will be in listen-only mode, but if you do have a question, please post it in the chat, and we will answer those throughout the presentation. And then at the end of the webinar, we'll have a survey for you. If you guys could fill that out, give us some feedback, we would really appreciate that. So I'm just going to go over a few things, what we're going to talk about today. So I just want to, help you guys recognize and understand different types of residential buildings, changes that I've been seeing in industries that I'm sure you guys are, as well as on the agent side of things, seeing things with your markets and other wholesalers as well. The important things you should be looking out for when you're writing an apartment, what building details are important, and how that correlates to a possible inspection on an apartment building. And then understanding the different types of coverages that are important for an apartment as well. And then what I need in order to prepare a quotable submission for you guys. All right, so by definition of an apartment, we'd be looking at 5 units or more. That's generally speaking the commercial definition of an apartment. 1 to 4 family dwellings. Those can be either personal lines or commercial lines. It really depends on the named insured, who owns the building, things like that. So there's different, and who's occupying the building. So that could be, where there's a differentiation between a 5-unit apartment or 5-unit plus apartment versus a 1 to 4 single family dwelling. Again, on the 5 or more units, those could be made up of multiple units. Say there's 10 total buildings, but each building has 2 units. The total number of units in that complex is 20, so therefore we'd be able to consider it as an apartment. This also includes, for me, mixed-use buildings. So on the commercial line side of things, we can do mixed-use buildings where, say, there's commercial businesses on the bottom and then apartment units on top. So on the next slide, I'm going to show you guys just some pictures of these types of apartments that I'm speaking about. So our top left picture, you can see clearly there's multiple buildings within this apartment complex. So it's made up of multiple buildings, so it could have as many units as each building has, and it would still be considered all under the same apartment. The top right picture, that one shows you, as you can see, there's commercial businesses on the bottom, so like I was just speaking about, mixed-use buildings, and then you can see the residential units above it. So that's something we can consider as well. Your bottom left picture would be, something to show you like the single-family dwellings, what I was referring to. So you can clearly see that each home is their own individual unit. So somebody could own one of those units and be leasing it out, and so that would be considered a single family rental. Again, so that could be anywhere from 1 to 4 family units for that class. And then the bottom right picture just kind of shows you a single building with one main entrance, but there could be 7 or 8 apartment units within that building. So they're just using that one main entrance with common hallways. But again, just different variations of residential type buildings that you might see or come across. All right, so before we dive into, the specifics on apartments, I want to just talk about a few things I've been seeing. Obviously, for a lot of brokers, if you're here in California, obviously you're well aware of the wildfire and brush mapping that pretty much every carrier has taken into effect one way or another. Everybody does it a little bit differently, but that's definitely becoming a thing because I'm obviously seeing a lot of non-renewals as a result of this. I'm also seeing a lot of non-renewals because of loss history, or markets aren't wanting to write in a specific area anymore because they feel like they're inundated in that area and they just feel that potential claims that could arise in that area. So they're trying to get out of that area. So I have some carriers that have decided not to write in specific zip codes. Other ones are just writing in specific areas. It's kind of all over the place. And I know we're starting to see that in some other states as well, like Oregon and Washington, pretty much any state that's been on fire. It's definitely becoming a newer trend towards that being more the underwriting is being tightened up for sure. And carriers are being very specific about what they're wanting to take. Other carriers I've seen are taking a cap on the building age that they're willing to accept. So, some markets aren't wanting to write things more than 40 or 50 years old, but again, they're still looking for those buildings to be updated. I've also seen caps on number of units, the size of the building, the square footage, how much property coverage they're willing to write. Again, that can vary again by where it's located, the risk itself. So I've kind of been seeing that. And then rate increases. I'm sure most people are kind of used to that right now. I've definitely been seeing a lot of that. Submissions I've been getting as well are people are sending over because they've taken some significant rate increases. So trying to help place that. I've seen some carriers decide that they're no longer going to write apartments, so they've exited the marketplace, or especially here in California, I've seen habitability exclusions added on. Those losses, especially in California, can be pretty detrimental. So you'll see that probably if you get a non-admitted quote. There's most likely, especially like I said in California, going to be a habitability exclusion included on the quote. But that's not all markets, just some of the things I've been seeing. Um, so I think that's it. Oh, I do want to mention, because I do get a lot of submissions in Texas. Texas is not the easiest market for me to write habitability in. So I will be honest, I don't do well with large schedules. Really, anything up to 3 million TIV is about my cap in Texas, just because of the wind and hail requirements. Not all of my markets will offer wind and hail for me in Texas. And then the ones that do, like I said, 3 million TIV is about where I can go in Texas. So if you have a larger schedule from a property perspective, I would not be a market for that. I can help you with the monoline GL. That's definitely something we can do. But property, it's pretty tough for me in Texas. The same with Colorado. I've been seeing some more submissions from Colorado agents. And again, I'm running into that wind and hail issue with my markets there as well, just because we just don't have the same market availability in Texas and Colorado like we do here in our home state of California and some of the other states that we're licensed in. So just something to keep in mind. If you ever have a submission and you're not sure, feel free to shoot me an email or give me a call, and I'm happy to talk about it and let you know if it's something I can consider. All right. So knowing the building details, this is really important. All this information on the screen helps me underwrite the risk, determine what markets I can go to. Because like I said, since there's so many changes within the marketplace, somebody will call me and ask me, hey, what markets do you have for our apartment? It's really hard for me to say right now because of how many different changes there are. One risk could qualify with this market, and then the next risk could be slightly different and then not qualify with that market as well. So it's hard for me to say from that perspective, but some important information to make note of and to make sure is included somewhere on your submission. The number of units, that is the rating factor for this. If there's multiple buildings, I need that information because generally speaking, even if my markets can offer blanket coverage, they will still be looking for some sort of breakdown of the building. So we're talking about like a statement of values, which we'll talk about in a few slides from now. So that's always helpful information, knowing the number of buildings. Does the complex have a pool? Do they have a playground? Anything like that, because those are all subsequential GL class codes that need to be added onto the quote. So that's important information to know. The annual rents, that is an important information so I can offer business income. Even if my markets can offer ALS, we still need the value because it's something we have to fill in. Like I said, the same thing kind of with if there's multiple buildings that we're offering blanket coverage, we still need the breakdown of everything. Are there any vacancies? Every carrier's got slightly different guidelines, but generally speaking, we're looking for 70% or higher occupancy rate in apartments for it to qualify as an apartment. Otherwise we could probably look at it as a partially vacant building and explore that route as well. Are there any commercial occupancies? If there are commercial occupancies, we'd be wanting to know the commercial square footage, the types of tenants in the building versus the residential square footage, because the commercial side of things for the LRO portion would be rated on the square footage, and then the apartments would be rated on the number of residential units. And then do they have a management company or is it landlord managed? That's always good information to know as well, because especially if we need to add on an AI for that property management company. Other important things to know that I definitely sometimes are missed is I definitely need to know the building age, because as I mentioned, building age is definitely becoming a driving factor of what markets are available. If there's been updates to the wiring, plumbing, heating, and roof, my markets are looking for updates within the last 25 to 35 years for those things. The type of construction type, that's extremely important as well. The number of stories, the square footage, the type of plumbing, that's becoming more prevalent. If there's galvanized plumbing in the building, I'd have to rate coverage as basic ECV. I wouldn't be able to offer a special form. And then again, the roof, the electrical. I do want to spend a little bit of time talking about the electrical, of which we will do in a few slides from now, because there are some questions on our supplemental and other supplementals that seem to confuse some brokers. So we'll go into more specifics on that. Again, we're also looking at the condition of the building, the maintenance of it. Is there graffiti on the building? We're looking to see, is the building being upkept? And then life safety, requirements would include, we're looking for fire extinguishers to be available. They don't, smoke detectors, if they have a sprinkler system, fire alarm, and if they have a fire alarm, is it centrally monitored? Those things, allow for potentially with certain carriers, give you a credit. So that's important information to notate. And then the stairways and the railing types, are they horizontal railings or are they vertical railings? And I will give some examples on the next page about the railings, because those definitely become an issue for some things. So on your left side picture, you can see the railings on here. They have vertical railings, which is allowed on my markets. So say they had horizontal railings. Unfortunately, those aren't something my markets are wanting to take, because they basically act like a step ladder. So, say a small child was out on the balcony and decides to climb up, get to the top, and then could unfortunately climb down or fall over on the other side. So if there are horizontal railings, it's not the end of the world. As long as there's some sort of barrier put up between the railings. So maybe they put like some mesh in there, or like plexiglass. I've seen that before. So we can get away with the horizontal railings as long as that's in there. And then the pool needs to be fully fenced with a self-latching gate. I've had some submissions recently that have not had the pool been fully fenced. So that is a requirement for my markets. The pool would have to be fully fenced for me to be able to consider. I do see we have a question. Sorry about that. Is there a limit on building age? I have markets that don't have a building age limit. It really depends, again, on the risk itself. So I've quoted things as early as like the 1880s before. So it's definitely something we can take a look at. It just would really depend on more specifics of the risk to see if it qualified with my markets that will consider those older buildings. All right. So I'm going to go ahead and talk about apartment coverages, what coverages, people are generally looking for them. So we can do a package where we can do the GL and the property, or we can look at doing monoline property or monoline GL. Really depends on, what the insured is looking for that we can help with. So for the property, that would include your building limit, your business income, if you need building ordinance coverages, equipment breakdown, if a market is able to offer a property enhancement endorsement. So those are property coverages we'd be looking at. I do want to make note for the building and other property components. So say there's maybe a carport or maybe a detached structure for a trash enclosure or something like that. If it's not attached to the building and you're looking for building any sort of property coverage on that, I would need that scheduled out. So on the next slide, I will show you a picture of what I mean with regards to attached versus detached components, but that is something to note. So if you get an email from me, if I get a submission and I see, like when I'm looking at the property, oh, there's a carport, but I don't see any mention of the carport on the Accords or on the submission, I'll reach out and ask you if you're looking for coverage for that. Sometimes the insurer doesn't want coverage for it, which is totally fine. I just ask to make sure I'm offering all the coverages available that I can. And then the GL, like I said, we can offer hired and non-owned auto with the GL as long as that qualifies. If there's an apartment manager, we can definitely look at offering fidelity coverage. And then my coworker Darby could also look at doing workers' comp for you. We are not a market for earthquake or flood for any line of coverage. So on apartments or anything else, we want to be offering that. And for the GL, generally speaking, standard limits 1, 2 is what we offer. If you need higher limits, we can offer an excess or an umbrella. The maximum I can offer on an apartment would be $5 million for that. So that is an option as well. And as I've mentioned multiple times, our market availability is going to, vary by state, location, risk. So getting down to the nitty gritty would be on a submission by submission basis. All right. So for attached versus detached property components, just to make a few points. So on the picture on the left, you can see that the fence is clearly attached to the building. So since the fence is attached to the building, we would just, whatever value would be assigned to the fence would just be added into the total building limit. So say the fence was $10,000 and your building was $120,000. So your total limit would be $130,000 for that, including the fence. In the picture on the right, you can see that the carport is clearly not attached to the building. So the building would have its own limit, and then we could schedule on the carport as well. And then in the back, you can kind of see a trash enclosure too. Again, since that's not attached to the building, if you were looking for coverage for that as well, we would want to schedule that on. Some markets offer some like add-on coverage for these types of things, but not all of them. So this is why, it's always just good if you want to list it out. When I'm going through my markets, I will know, okay, this one I would need to schedule it on with, another one I wouldn't, just so I have that information. And I don't have to keep going back and forth with you and, to try to get you a submission faster. All right, so let's talk about property limits. That's pretty much the main thing that's driving your apartment. What's going to drive your premium on these is the property coverage. So obviously, we're at a point right now where inflation is high, so I've been seeing a lot higher building limits, which I can definitely understand because, the cost of things has definitely increased. However, I do want to forewarn you that, if you're looking for a limit that's over probably $300 a square foot, don't be surprised if I asked you for a building valuation report to confirm the building limit because some markets aren't fully there on board with offering such high limits. Obviously, like I said, we understand that there is the inflation in the cost of things to rebuild has increased, but offering that high of limit, they would be looking for some sort of backup to guarantee that limit to be okay with offering that limit. So your replacement cost is, that's going to vary by what state you're located in, the type of construction, the building height, the quality and condition of the building, the type of building, is it fully residential? Is it mixed use? Is it only commercial? Is it a warehouse? So that's all going to go into effect. Whenever I get a submission, one of the first things I do when I start reviewing the property side of things is I will figure out the cost per square foot to see what that's coming up to. And then, like I said, when I see those really high ones, I would be asking for that. Some of our markets run one, and it's built into their system, and they will spit out a number, and it doesn't always necessarily be in line with your number. So we can look at coming around. So that's what I see a lot of times on things. I will say, because of the lack of updates on some of these buildings lately on the submissions I've been getting, I'm only able to offer basic ACV. And the limits that I'm getting originally requested are for a replacement cost value. So I'm going back and having to ask for an ACV value because the building limit is too high for me when I'm having to offer basic ACV. So if you see that for me in a submission, like in a response back to you, that's because I can't offer the coverage form. So my markets aren't going to want to offer an ACV limit or coverage at a replacement cost value. It just doesn't compute. So they won't want to offer coverage at that. So if you see that from me, that is why I'm asking for it. All right, so I did talk about a statement of values a few slides ago. So this helps for when we have to break down, a location that has multiple buildings. Say they have, there's 7 buildings within the complex. And so what I'm looking for at minimum to include is the number of units, the square footage, and whatever property limits you're looking for, as in the building limit per building, the BPP limit per building if that's needed, and the business income per limit. So we can, like I said, you can use this on multiple buildings. schedules, or you can use it on multiple locations. So say an insured owns 3 or 4 locations, and each one, has a varying number of buildings. This would be helpful as well. Again, if it's not included somewhere on the accords, if you want to include on your SOV, the different types of detached components that we talked about, include that on there as well, so I can make sure coverage is included. All right. And then I'm just going to show you guys an example, pretty basic SOV. Doesn't have to look like this, but just to give you an idea of what I'm looking for. Everybody's got varying kinds, and as long as it's got the pertinent information on there, I can pretty much work off of it. All right, so I have pulled on this slide and the next slide a couple sections from our apartment supplemental, and I just want to go over a few of the questions that I'd see that are often misanswered, or brokers aren't sure how to answer, just to give you guys, if I'm coming back to you on this, this is why. So for the building systems section, most importantly, what I'm looking at is the electrical information, because this will help determine if I have a market for risk or not. So if there are fuses, Federal Pacific, aluminum wiring, knob and tube wiring, I said fuses, should be everything, then that would be a prohibit for me. Those are not acceptable by my markets. So if there's any type of that wiring or those panels within the building, that's not something I'm going to have a market for, just because of the known fires that they can cause. So it's just not something my markets will accept as unacceptable for their underwriting guidelines. So a lot of the times I will see does the building have Federal Pacific or Stab Lock electrical panels? Answered as yes, but then on the Accord 140, I will see that you have indicated that the building has been updated and the wiring has been updated within the past 20 to 25 years. So generally I'll go back on that, because it seems a little odd if they've had their electrical fully updated that they would still have those panels. Now sometimes they do, because the electrician says, these are still in working order. But we are looking for the electrical to be on functioning and operational circuit breakers. That's what we're looking for. So, and a lot of times I get people who will be like, oh, I answered that yes because I didn't know what that was. I always recommend just Google it, or ask me if you're not sure. Because like I said, I'm going to come back to you if it's marked as yes, because I'm either going to tell you, sorry, this is a prohibit, or it seems a little odd that this is yes, but it's been updated. So that's something, to be on the lookout for. And then also, I do want to mention about the roof. A lot of the times I will see 1 year listed on the Accord 140 of when the roof was updated, and then I'll see another year listed on this supplemental. So if we can try and be consistent with when the updates, because like I said, that does affect what markets I can go to. And then, like I said, if the building's sprinklered, that's important information to know, because it can dictate what markets I go to. If only a portion of the building is sprinklered, if you could provide that information, let me know what percentage of that is and what portion of the building that is sprinklered. Like I mentioned before, fire extinguishers are important. Those have to be currently tagged and properly mounted. That would be a requirement for us, and on any loss control inspection. That's probably the number one thing we get back when we get back a loss control survey from a carrier, is the fire extinguishers aren't currently tagged and properly mounted. So it's real easy to get your insured to get themselves on an annual contract. Just like 1 or 2 weeks ago, the company that we used was just here in our office servicing them. He was here for 25 minutes. He serviced our 3 fire extinguishers, and we're good until next year. So it's a really simple thing that can get done and set up. There's plenty of companies out there that will service them for you. All right. This section just kind of goes over some of the amenities within an apartment complex that would want to be noted. So as I mentioned earlier, if you have a mixed-use building, I do need to know that, yes, that it is mixed use, and then I also need to know what the commercial occupancies are and what the total square footage of those commercial occupancies are, because that's what I need in order to be able to rate for that portion of it. And then if there are any commercial cooking exposures, it's really important that I have these questions answered, because that is the appropriate controls in place within the restaurant are required in order for that to be able to offer them coverage for the LRO portion. Do they have underground or indoor parking? That is an important question to know, because some of my markets, you know, are looking for that portion to be sprinklered. Maybe the rest of the building is not sprinklered. So, knowing if that's present is there, and then the square footage of that is helpful as well, because sometimes once we get over a certain size for those parking garages, we have to add on a class code for the GL for the parking garage. If they don't have a parking garage and, like they just have a normal parking lot, that's automatically contemplated within the rate of a normal apartment. So, like I said, if it's an indoor garage or underground, depending on the size, sometimes we have to add on an additional class code on the GL to include for the parking. Like we talked about, if there's a pool or spa present, making sure that it's fully fenced. It has depth markers. If there's a diving board or slide, that's important information to know, because that can be prohibited with some markets. Especially some markets will include it all, won't want them all together. Others will take them up to a certain height, so that's important information to know. Again, if there's a playground, that's another important thing to know, because that's something we would be looking to have to include in on the GL. And if there is a playground, we're wanting to make sure that there is a soft surface under there, whether that's sand, wood chip, like mulch kind of thing. As long as there's a soft surface underneath it, then that would be fine, and that's acceptable. And then just one last thing I want to talk about is the grills on balconies. If there are any charcoal grilling on balconies, that would be prohibited. We would not want that on the building. Gas grills, some markets are kind of particular, but they want them to be minimum 10 feet away from the building while in use. So sometimes that's something that will come back on loss control. It just kind of depends, again, on the carrier. All right, so what do I need for a submission? So in order to quote for you guys, I would need an Accord 125, 126, and 140. Again, the important information to make sure is included the number of units, the annual rents, if there's pools, playgrounds, etc. And then an apartment supplemental. I just showed you portions of ours, which is available on our website. And then I can also work off of other markets supplementals. They pretty much ask similar questions. So if there's something specific I'm missing, or when I review somebody else's supplemental, I'll just ask you for that information in an email. Again, if there's multiple buildings or multiple locations, that statement of values is really important and really helpful for me. And especially right now, loss history, getting loss history, I can quote subject to clean and favorable loss history. But if they have had losses in the past 3 to 5 years, don't be surprised if I send you an email asking you what happened, how did the loss occur, have the damages been repaired, what have they done to try to mitigate these from happening again. So if you've worked with me before, you've probably had that question asked for you, because I do have to provide detailed information to my markets when there have been losses, so that way they can determine, if it's an acceptable risk for them. So that is important information to provide. And then if you have a target premium, that is helpful, but I know it's kind of hard sometimes right now, especially if your risk is being non-renewed or somebody's taking such a significant increase. It's kind of hard to, have a target premium. And again, like I said, once I've reviewed a submission, if there's anything I have a question about, I will shoot you an email and just ask you for that information, and then you can just send it back to me, and then I'll add it to the file and see where I can take the risk and what I can do for you on that one. All right, so I don't have anything else for you guys. So if you have any questions, feel free to pop them in the chat. Even after the webinar is ended, if you have additional questions, feel free to drop them in there, and we'll make sure they get answered. And you can also check out our website for some tools. Our applications are on there, other upcoming webinars that we have. Again, we'll be sending out a survey, so if you could offer your feedback, that would be appreciated. You can submit your submissions to submissions@cidinsurance.com. And then if you have any questions, my contact information is on the screen, and you feel free to give me an email or give me a call, and I'm happy to help you with whatever you've got. All right, I appreciate everybody today. Thank you. Have a great day.